Welcome back. Take a look at futures indicating a decline at the start of trading this morning. Dow Industrials down about 8. The Nasdaq down 11. The S&P lower by 3 points. However, stocks closed higher yesterday. The Dow was up better than 450 points, and now the S&P 500 is set for the best beginning to the year since 2019. Look at this market year to date. Dow Industrials up 5.5%. The Nasdaq up 9.25%. The S&P 500 higher by better than 10% in the first quarter, which ends, of course, tomorrow. A look at the 10-year Treasury yield ahead of the final read of fourth quarter GDP out at 8:30 a.m. Eastern this morning. The yield is up 3 1/3 basis points right now, sitting at 4.22%. Economists are expecting the GDP to come in at an annualized growth rate of 3.2%. We'll also get the final, the February PCE index out tomorrow. Joining us right now to get ahead of it is Bolvin Wealth Management Group President Gina Bolvin. Gina, great to see you. Thank you so much for being here.
Good morning.
What are you expecting from the data this morning and overall inflation in the coming months?
Yeah. Hi. Good morning, Maria. We are expecting an uptick in the PCE, which is coming out tomorrow, Good Friday, which is coming out Good Friday when the market's closed. So I don't think it's going to be that much of a market mover. It will show a little bit of increase in inflation on the heels of the CPI and the PPI that came out in January and February. That was harder than expected. And Powell is expecting this as well. So I don't think it's going to be a game changer for the market or for the Fed.
Well, we got new.
The Fed said.
Yep, that's what I was going to say. We got new information from the Fed because Fed Governor Christopher Waller out yesterday saying that, quote, there's no rush to lower interest rates. But he still does expect the first move to happen this year, Gina. When are you expecting rate cuts? And what about this comment from Waller, no rush to cut rates now?
Well, we've seen this. This is a constant theme, Maria, where the Fed officials are coming out and throwing cold water over the market expectation of rate cuts, but the market keeps moving higher. So Waller came out last night after the close, and he was hawkish. We saw Lisa Cook earlier this week come out. Raphael Bostic said he's only expecting one rate cut, and the market isn't listening. It's not really affecting the earnings season or the macro story.
Yeah, Mark Shepard, jump in here. We've gone from 6 rate cuts expected to 3 rate cuts expected to now no rush to cut rates.
Well, I doubt we get 3 rate cuts this year. I find it very hard to believe when you actually have inflation accelerating now. We've seen the readings coming in at 0.4% month over month. So that doesn't seem to be an economic environment where the Fed should be cutting rates in the first place. But, Gina, I want to talk to you about the market. I mean, typically in an election year, we see a drawdown or a pullback in like the 15 to 16% range during election years. We've seen nothing of that sort so far. I mean, the market just continues to go up almost every single day. There's minimal volatility, a ton of complacency. And then you look at some of the underlying fundamentals. I mean, there's an increasing number of stocks making 52-week highs almost every day. You've got operating margins expanding. And when those conditions are present, it's very rare that you see a meaningful pullback. So I wanted to get your take on whether or not there will be a pullback in the market this year to give some investors an opportunity who may have missed out on some stocks to get in at a discount.
It's been an incredible year, and I've been bullish, but even this has surprised me. I absolutely expect a correction, but good luck trying to time it. You mentioned that it's an election year, Mark. Election years when incumbents are running are up on average 12%. I think it could be even better than that this year because we have 2 candidates running that we're very familiar with. Yeah. So I do expect a correction, but I don't think this bull market is over. What I really like about this market is we've seen such great participation. Industrials and financials are actually outperforming the NASDAQ, the technology stocks this year. So rotation is the lifeline to any bull market, and that's why it's a healthy bull market, and I think it will continue to run.
But, you've had all these outside events as well, changing the narrative. First, you had the bullying of the ships in the Red Sea. And as a result, those ships, the Maersk ships, had to go around the African Horn. That elevated oil prices. And now, following the collapse of the Baltimore Bridge on Tuesday, global ocean carriers telling logistics companies and U.S. shippers that once the cargo is dropped off at an alternative port, it's no longer their responsibility. I spoke with the analyst at Breakawave Advisors, managing partner John Kartsonis. He was here on this program yesterday. He said we are likely going to see an increase in consumer prices as a result of this. Watch this.
What happens is usually freight rates move higher. The number one thing you're going to see here, especially on the consumer goods shipping, things that we use every day, cars, car parts, is that you're going to see probably a marginal increase on the delivered price of these goods.
So, Gina, in 2023, that port was the second busiest for coal exports. Obviously, we've talked about liquefied natural gas, waste paper, automobiles, light trucks, and even the cruise lines. It was a cruise terminal. Operators Norwegian, Carnival, Royal Caribbean all use that port for the Caribbean and Canadian and other Atlantic destinations. These are all areas where we are expecting prices to move higher. Your reaction and expectations for inflation as a result?
Well, as Powell said in the FOMC meeting last week, he expects bumpiness in inflation. And while this is a tragedy, what happened with the bridge, I think it's not really going to affect the macro story. Most vehicles are imported by land from Canada and Mexico. And when we think about the stock market, we're really focused right now on fundamentals and earnings growth. And that's where we've seen tremendous resiliency. And that's why the market is moving higher, even though we're seeing an uptick in inflation.
All right, Gina, we will leave it there. Great to talk with you. Thanks so much. Gina Bolvin on markets and the economy this morning. Thank you.